So the question for the morning: does the CD dollar exchange rate affect you?
Yes.
If it does, how? That's the question for the morning. Does the CD dollar exchange rate affect you? How? I really want to hear from business people, bankers, traders,
People paying mortgage.
yeah, mortgage clients, ordinary Ghanaians. Does the exchange rate affect you in any way? If it does, send me a voice note. I want to hear your voice. I want you to explain. You know, sometimes we discuss issues from political perspective, and so it's like, oh yeah, this government, the dollar was better and that kind of thing. But I want us to discuss it from a dispassionate point of view. Yes, there's the politics which we will deal with, but I want people to tell me how the exchange rate affects your life and your business. So you can send me a voice note. It's for everybody to hear. 054-998-6996. That's my plan for the morning. How does the exchange rate affect you? I will trace the movement of the currency for you. Do you know that May 20, 2019, Sky, can you guess how much the dollar was? So your birthday, 2019 is how many years ago? 5 years ago.
2019, no.
5 years.
2019, is it 5 years? It's not yet.
We are in
2024 and
2024.
something.
Almost 5.
2019 is 5 years ago. May 20.
May 20.
So your birthday,
okay.
2019.
Oh, yes. But
How-
we are not yet.
Yeah, so this week, okay, so
Okay.
this week, 5 years ago, do you know how much the dollar was?
What
selling?
was it?
Guess.
It must have been 2019. It must
2019.
be 10 point something.
Oh, you are
No,
lost.
no.
I'm lost.
2019, it must have been around, let's say, 4.9.
4.9.
No, it was 5.2.
5.2.
Yes, it was 5.2. 5 cities, 20 pesos for the dollar, May 2019. And then by August 2020, it went to 5.7. 5.7. Stayed around the same area for pretty much the whole year. 5.7-ish. August
5.7.
2021. Then February 2022, it was around 6.8.
That was when it started to break jail.
That didn't even started yet. Then by July 2022, July 2022, it was 8.5. So it had jumped from 6.8 in February to 8.5 in July 2022. All right. Then almighty August. So from August, end of August, early September, look at where it went to. Boom, 9.8. So by September 2022, it was 9.8. Sky. Then it got to 10 by October.
10,
October
man.
2022, it was 10.45. Okay. Then by the time we got to October 17, it was 13.15. 13.15. It peaked. The dollar peaked at 14.06 November.
Last year.
No, 2022.
2022.
So November 2022, the dollar peaked at 14.06. Then it started coming down in end of November into Christmas. So by Christmas of that year, December, it had come down to 11.7. So it had come down to 11.7 by Christmas of 2022.
2022.
Good. Then it started rising again. February 2023, 12.1. You see the point I'm making? 12.1. So it peaked in November 2022, came down for Christmas to 11, and started rising again. Then it made a gradual decline. So if you check around May of last year, the dollar was not misbehaving. May of last year, it was around 10.6. So May of 2023, the dollar was around 10.6, which is lower than it was in November of the 2022, even lower than the Christmas. So it had come down to 10.6, but that was not its natural level. Then it started doing its thing again. Okay, so now you go to July 2023, they start writing to 10.9. Okay, then you get to December, Christmas Day 2023, it was 11.3. It's rising. Christmas Day of last year, 11.3. Then you come to March, 13.06. March of 2024, 13.06. As we speak, is 14.15 on that platform. All right,
Wow.
the BOG platform, 14. So what I'm saying is that by close of this week, it would have hit the peak it hit, because don't forget the November 2022 peak was 14 points. So the reason I'm bringing this topic up is that we are back at November 2022
It's back to 40.
because you were 5.7 August 2021, 6.8 February 2022. Then you jump all the way to 14 November of 2022. Then you come down to 10 in December of that year. You do around 10 all the way to May last year. Now you are back to 14. So basically, 2022 is back. You follow my logic? And the dollar, the pound, the euro are all out of control.
Do me a favor. What was the CD against the dollar in December of 2017? Let's make it January 2017.
2017. Okay, December.
Yeah, December or January, one of them.
Okay. December 2017, it was 4.3.
4.3.
So December 2017, 4.3. I want me to go to 2016.
Okay, so go to December 2016. Let's see something.
I see where you are going with this matter. Okay, I'm coming. You want 2016?
Yeah,
eh?
December 2016.
December 2016, it was 4.1.
4.1.
So December 2016 was 4.1.
Okay. Now do me a favor. Go to January 2017. Let's see something.
So I'm coming. December 2016,
Mm-hmm.
4.1. Yeah, I should go to what? January what?
January 2017.
Oh, around the same figure.
Yeah.
It
It will be
was-
around the same thing.
Around the same figure. So January 2017, it was 4.29. 4.29. So what do you want me to do? Okay, so let's do it this way.
Uh-huh.
December 2016, 4.1. January was 4.2.
Mm-hmm.
2017.
Mm-hmm.
So let me go to December 2020.
Mm-hmm.
December 2020 will give you December 2020 will give you 5.8.
So there was
December 2020 5.8. So
marginal movement.
it wasn't that bad.
Yes.
So between when Akufo-Addo took over in 2017
Mm-hmm.
of 4.2
Mm-hmm.
to December when they were finishing their first, and that's why Bawumia said they had arrested the CDM.
The CD.
Because 4.2 to 5.8 is not that wild.
Yeah. No,
So in the first term, they were okay.
Mm.
4.2 to 5.8, everything was jet.
mm-hmm.
All the lectures were coming to pass.
Mm.
You get it? Because Mahama's lowest, of course, there were times he went a bit above 4.1, but let's say an average of 4
Mm-hmm.
to an average of 6
Mm-hmm.
by the time Akufo-Addo's first term was getting over.
Mm-hmm.
So you can say from 2021, so let's see 2021. 2021 is still around 5.9.
Mm-hmm.
So the whole of 2021, things were okay.
Mm-hmm.
Then it goes all the way to January 2022 when it got to 6. So between 2021 and 2022, it didn't fall that much.
Mm-hmm.
So January 2022, it was around 6. By November of 2022,
It had reached.
it had gotten to 14.
Oh.
Think about it. January of 2022, it was 6. Oh. And this is just from 4. So the first term, they were managing the thing. So I don't know what happened. They said COVID, Russia, Ukraine, everything. But from 6 to 14, okay, fine. So let's assume Russia, Ukraine, and all those things took us to 14.
Mm.
Then you come down to 10
Mm-hmm.
by the by 11 by Christmas. So 2022 can say it's an outlier year. Then 2023 comes. Around last year, this time, it was 10.9. So let's say 11. All right. So you've moved from 4 to 6 in your first term. In the first year of your second term, you've moved from 5.8 to 6. So you are still well. In the second year of your second term, you move from 6 to 14. And then you come down to 10. So let's say you move from 6 to 10. Now you've gone back to 14. You've gone back to 14. So now the 10 was not even natural. So it means it's threatening that your natural is not even the 10.
Mm-hmm.
You get my point now. So now you are 14, close to 15. In the last year of your term. So if you look at it, in 2021, when you started, you were around 6. You are now ending at 14. So you've lost 8 CDs. Now think about businesses that make purchases or buy inputs in dollars. So whatever you're manufacturing, if you buy it in dollars, your cost of production has doubled. Because if you were buying something at the beginning of the term at 6 cedis per ton, you are buying it at 14 cedis per ton. So it's more than doubled. Your costs have doubled. You haven't expanded your land. You haven't done anything. You haven't expanded it. You haven't added inflation. You haven't added interest rate. You are just talking about the dollar. So let's assume your input, you are buying a generator to start a company. If the generator costs you $20,000 in January of 2021, by the end of the term, the generator, the same $20,000 is going to be times 2 in cedis.
Because it affects everything.
You get it? We are trying to make it easy for both to understand. So the exchange rate is like anything you buy which is dollar denominated. So you have a mortgage. You are paying $500 a month, assumption. So the $500 a month, when you started the mortgage, maybe when Mama was leaving power, it was 4. So that's 5 for 22,000 cedis. Okay. Now, the person who lent you the money, he's looking for his 20,000, is looking for his $500 a month. Today, it's 14.9. So you need 14.9
times 500.
15 by 5, so 7,500 cedis.
So he was paying 2,000 cedis per month at the beginning of the term, or when Mahama was leaving power for his mortgage. Now he needs to pay 7,500 cedis for the same dollar. Now, so let's assume we're being paid 2,000 cedis that time. Has your salary increased
exponentially
by 3.5? It has not. You get it? So it's a major issue. And the other point is that if you take the dollar, the cedi has been losing value against the dollar since record started. That's not the problem. The problem is the spikes. Why are we okay? So the question I have for the NPB is, how were you able to manage the dollar between January 2017 and 2020 so well? What happened? What's happening in the second term? Is it the Russia-Ukraine war alone?
Yeah.
Is it the
COVID, Russia-Ukraine war?
Yeah, because COVID, guys, COVID was 2020.
Yes.
So let's assume the split was 2021. But 2021 were pretty cool. 2021, Sky, we were still okay because I moved from 12.8 to 6. It's not that bad. Then even 2022 January, we are around 6. It's not that crazy. So fine. People started withdrawing their monies because the Fed increased their rates. That was one. But we had also overborrowed. And they kicked us out of the international market. And all the forces conspired to drive us out of the international capital markets. All right, because we were borrowing money to artificially show up the dollar. We're not generating enough cedis. We also didn't have the gold for oil at the time. We hadn't had what is called the ORR. We didn't have enough gold to buy dollars if we wanted to. All those things were there. So we've put all those things in place now. So yes, let's assume 2022 was an outlier year. Why is it happening again in 2024? Do you understand? All that, because if you look at what they implemented after 2022, the dollar shouldn't be that expensive now in 2024 because, for example, the official reserve ratio was increased. The amount of gold that you keep, they raised it to almost 35%. So many things were done. Gold for oil was procured. So you did all that to bring us back to 10 in 2023. And we've gone back to 14. Do you see my problem? So is it that the thing they did in 2023 was not continued? It was not long-term and sustainable enough? Then the other question is, between the monetary authorities and fiscal authorities, who is driving the exchange rate problem? Bank of Ghana has 2 fundamental things it does: price stability and full employment. That's the objective of monetary policy. Price stability, managing inflation using the interest rates. Okay, but it's really the interest rate and exchange rate. And Bawumia told us that the interest rate and the inflation rate are really not the issue, but it was the exchange rate, which is when he said because we are an import-dependent economy, the exchange rate is actually the true indicator of economic health. He brought that narrative. So in the past, they will raise the monetary policy rate, they will try and manage inflation through the inflation targeting framework. And inflation was being controlled, but the exchange rate was out of gear. So when we moved from around 2 to 4, and Mahama, I said, look, the currency has lost its value. So the exchange rate actually is the real indicator. So my question is, if the exchange rate is the real indicator, why so let's assume 2022 was an outlier year. Why is it happening again? Do you understand my point? What did you do or what did you learn from the 2022 problem to the extent that it's now repeating itself. And now Bloomberg is predicting that the lowest the currency fell, that's 14.6. We will breach it this quarter or third quarter. So the quarter we're entering, we are going to breach that. And the year will end at 15.98. So is it because we've been kicked out of the international market? So was it an artificial stability? What other policies did they implement beyond the borrowing Eurobonds to shore up the dollar? What did they do? The ORR thing they spoke about. Gold for oil. If all those things are innovative policies, why are we back at 14.9? The BOG has answered, and the BOG must tell us whether it's a fiscal side problem or it's a monetary issue. Because once you are supposed to manage the economy for stable prices, your mandate for price stability includes exchange rate management. Because price drivers in Ghana are not just domestic, which is why Statistical Service will measure domestic inflation and inflation of imported goods. Do you understand my point? So if you have a mandate for price stability, it automatically means you have also a mandate for exchange rate stability. So the BOG has to answer questions. And now we are in a situation where the BOG is being accused of spending so much money on its staff. There are so many people working there. So what are they doing to manage the currency? Do you feel where I'm going to? So the government has to come and tell us what the solution is. Do you understand? It's unacceptable. 15 cedis to $1. How are you supposed to survive? Let's not even look at inflation. How are you going to survive on anything? Any major thing you buy, I use generator because of the doomsday situation. A 20 kVA generator is dollar denominated. And then there are also port charges that worsen it. So let's assume you want to buy a generator to power your plant. You're a cocoa producing country. So let's make it nice. You're a cocoa producing company where you add value to cocoa. You are not getting cocoa to buy because we didn't produce enough chocolate. We didn't produce enough cocoa. We've already sold our cocoa beans, and there's shortage of cocoa in the market. So you don't have raw material. You are paying more for power. That is not reliable. You want to buy a generator. The generator you are going to buy is dollar denominated. So the generator is more expensive. When you get to the port, there's also 25 charge costs on the generator you are buying. How are you going to survive? So the businesses are just collapsing. You get me? So the government must come and explain to us what is happening. There's no escape. They have to. If the currency is weak, your economic management has been blown out of the water, because you told us that currency management is the first responsibility of a government in this neck of the woods. Because based on your analysis, for the way our economy is structured, the exchange rate is the indicator, not inflation, not interest rate. So inflation has halved between last year and this year. Inflation has come from 50 to 25. Well, based on your own analysis, that doesn't mean anything. Do you understand my point? Because you said it's the exchange rate that actually answers the question, not the inflation, not the inflation rate. So we need the BOG, the Vice President, and the Ministry of Finance. They must come out.
Very important.
They must come out. It's completely unacceptable. You can't do business in an environment like this. I called the businessman yesterday. The guy spent like 20 minutes complaining to me. And I said, why are you complaining to me? He said, yeah, I said, well, yeah, we are all in it. So BOG, we need you to issue a statement on the currency. Why the big differential between even the announced rate by the BOG and what's on the market? Today, Nilate, 13.75 is the official figure they are quoting. Go to any forest bureau, it's 14.9. You get my point? So it's almost like we don't even want the truth. 13.7 and 14.9. It's not chicken change. 13.7 is where we were how many months back? That's what the BOG is quoting. We are 14.9. So if you are paying your mortgage, you need 14.9. If you are buying that generator, 14.9. We'll do social media trends and hopefully try and get some answers. 2 issues. How is the currency exchange rate affecting you? And then, why is it falling again so rapidly? We are back at 2022 November levels, right? Between August 2022 and November 2022, the cedi lost almost 80% of its value in those 3 months. We're back at that 14. The rate may not have been the same, but it's very serious because we're a year ago around 10.5, 10.9. Now we are 14.9. Now we'll do a few quick announcements, and then I will do my first interview. So I want to find out what's the reason for the latest slide. Then I also want to know how people have been affected by this. But Caleb, help me with a couple of announcements.
Bernard, if you're buying an SUV, it shouldn't be just like buying the cheapest toy. Walk into CFAO showroom and dazzle your mind with a broad selection of SUVs from world-class brands like Mercedes-Benz, Mitsubishi, and Suzuki. Whatever your style or budget range, there is an SUV carefully crafted for you. Also, did you all know you could trade in your car and top up for a brand new SUV? Yes, you can. With a top up from a finance partners, you can drive out with a brand new Mercedes-Benz, Mitsubishi, or Suzuki SUV from CFAO. We also back you with excellent after-sales service with centers in Accra, Tema, Spintex, Kumasi, and Takrady. Now, when you are buying an SUV, you know where to turn. Call 0302-742-100 or 0302-742-090 to get moving. Turn to CFAO Mobility Ghana, your mobility solutions all in one place. And if you're looking for that special present to appreciate your mom on a cool budget, Electroland Ghana Limited just made it easy and affordable with a Mother's Day bundle promo. With just 1,999 Ghana cedis, you will get a Nasco gas stove, kettle, juice maker, more home theater, and a fan in Mame Pap bundle. Show Mame she is your one and only with Wood Demufua bundle at 7,999 Ghana cedis for LED digital satellite TV, tabletop fridge, gas cooker, chest freezer, electric hot pot, microwave, iron fan, gas stove, and voltage regulator. Each bundle is a heartfelt gift of affordable luxury to appreciate our mother. So call us on 0503 159 739 for further inquiries. T's and C's apply.
Now, the APSA Ghana Ready to Work webinar is here. Now, the latest edition will talk about anxiety and how to deal with the stress that appears when you are beginning a career. So, like I said, we are discussing coping with anxiety as a young person, and we'll be live on APSA Bank Ghana's Facebook and YouTube platforms on Friday, the 17th of May at 11 a.m. Don't miss it. Your story matters. APSA. Now, the Ghana Growth Program is here, and if you are seeking fulfilling unstable employment, it is the option you should consider. Come and get some great education and support and knowledge in agriculture, agribusiness, technical and vocational skills. Remember that the Ghana Growth Program is brought to you by the MasterCard Foundation in collaboration with Springboard Roadshow Foundation and Limehouse. Call 0308-255-775. And APSA is saying that they want to hear your unique story. 259 of them are born every single minute, and they are inspired by them all, and your story has just begun. We invite you to write your story with us. Your story matters. APSA Bank.
And the Zenith Fund Phone promo ends today. You heard right. Today is your last opportunity to own a free Zenith MasterCard. Visit any Zenith Bank branch nationwide for your free Zenith MasterCard today and enjoy the convenience of making payments online or in-store or withdrawing cash from ATMs. Get your free Zenith MasterCard today and experience true convenience. Terms and conditions apply. Zenith Bank, in your best interest.
Now, Standard Water has over 25 years of experience in the water space. They have been providing quality and refreshing water all these years, and they are still in business. They are in 11 regions, and they are expanding. So if you want bottled water, sachet water, water for your dispenser, or customized water for that special occasion, speak to Standard Water today on 0202055703 or 0547-334-385. And this ad is FDA approved. The GRA is here, and they are reminding all withholding tax agents that all returns or withholding taxes must be paid to the Domestic Tax Revenue Division by the 15th of every month. So for April 2024, the returns should be done or be paid by the 15th of May 2024. Failure to do so will attract interest, but if you have questions, speak to the GRA via 0800 900 110 or call them on 0552 990 000.
Right. If you need to make an urgent call but you realize you don't have credit, or you're on a very important conversation and it was cut because you've run out of airtime, there is no need for all that stress, because on MTN, just dial *506# and you can get to borrow extra credit on MTN Extra Time. You can do same on the bundle to bundle data *506# and you're good to go. Your conversations don't need to end. Borrow extra time on your favorite network, MTN.
18 minutes past 8. So here's my first interview. Joe Jackson is
I'm actually acting CEO.
Acting CEO of Delex. Wonderful. So
yes, Ken has retired.
Oh, I didn't know.
Yes, he's retired since October last year.
Congratulations to him and to you for taking over then. Wonderful. Joe, so this is my question. Between July 2022 and November 2022, the cedi lost almost 80% of its value, where it plummeted from a rate of around 6.8 to almost 14 to the dollar. It sort of stabilized that Christmas, and by middle of last year, it was around 10.9, so 11. Okay. Now, it's gone back to the 14, and it's now threatening to hit 15. Now, the reason, my question is, we were told that the 2022 situation was an outlier. A lot of things happened. Russia-Ukraine war, all those things they said, and then they said the Fed had raised their rates, portfolio investors had taken their money out, and then they also said that, look, Ghana had been kicked out of the international market, there was no money to support the currency. All those things were said for the reason why that thing happened. So we stabilized at 11. Why are we now back to close to 15? Just a year and a half after.
Okay. Now, the true effect here is the inflation that we have been facing since the same time. And the fact that, you see, the two effects are at play. One is that the exchange rate itself fuels inflation. But the bigger problem was the deficit financing that the central bank undertook in 2022. That has taken a long time to feed into there's a time lag to feed into the system. And we are now feeling the effects. So the first thing was that we had artificially propped up the cedi. When we fell out of the market, the cedi tanked, then stabilized. Then, during that same period, we started pumping in money into the economy, supposedly to prop it up. But the effect of that money we pumped is now being felt now that the cedi is depreciating again. So it's a lagged effect of what we have done over the last year, especially after we fell out of the international markets. Does that make sense?
So your point is that 11 that we got last year around May, June was artificial?
Yes and no. If we had not pumped as much money into the economy over that period, we would not be facing it is inflation. See, now, first of all, the markets were close to us. When the markets were that artificial propping by bringing in euro dollars to prop up the cedi, we lost that effect. Then, after we lost that effect, we are also suffering from great inflation, mainly because, one, of course, Russia-Ukraine war and everything, but also more important was the effect of pumping deficit financing the government. That had a mighty inflationary effect. And that effect has been lagged. You see, what people forget is that when they say inflation is 50%, it doesn't mean that today when you enter the market, your prices have gone up by 50%. It takes time for us to filter through. It takes time for the suppliers to... Some people even have goods that they bought 6 months ago. It is the effect now of the new goods, etc., that is now killing us.
So you're saying that the efforts put in place post-November 2022, which seemingly stabilized the cedi, were not the real solutions?
They were a solution, yes, but we were also simultaneously sabotaging ourselves by creating more inflationary pressure.
I see. So what is the solution to where we are today?
Cut spending. Make sure that you don't, in this year of, what do you call it, election year, you don't spend more than you promised to, because that will just signal a spiraling and then a runaway. Remember that people like Bloomberg and co. don't expect that this government will be able to keep to its target. And that's why they've predicted that it will go to 15 and more. If they can keep spending down, if they are not tempted to spend to try and break the 8, it will stabilize after some time.
So for you, it's a question of cutting spending. There are issues around fewer inflows. You are not on the international market, so not dollars coming in. Your gold production your cocoa production was lower than expected, and therefore your inflows are also lower.
All those things have come into play. In fact, the main thing now has been cocoa. Cocoa inflows have been poor. Well, so I should actually restructure this. The two things. Cocoa, which is normally cocoa money comes in around this time to support the city. That cocoa money did not come in as expected, far below what was expected. So that is pressure. Then the lag effects of inflation are pressure. So there are two major things. Cocoa you can't do anything about. Inflation you can do something about.
So Bloomberg's prediction that by but they have two predictions. They said by Q3 the C would have reached its lowest. You know, in November 2022, it got to about 14 point something. They're basically saying that by Q3 it will well and truly breach that. And the prediction for December is 15.98. That's effectively 16. Now, I mean, do you buy that analysis?
Unfortunately, I buy into it.
Oh Lord. So there's no scenario under which this 15, this 14 that we are going through will come down. But
the scenario is not spending, making sure that you create even. See, one of the challenges we are facing now is that we are broke, but we don't behave as if we are broke. We are broke, but we still want to do things. If we institute austerity, you see, you remember when Kufuor came into power? It says austerity. And if you institute austerity and you signal to the markets that you are truly committed to it, the rates will come down.
Wow. So you are proposing an austerity. Thank you, Joe. I'm not happy with what you are saying, but I can't really disagree with you. So I'll keep it like that for a while.
I've been listening to you all morning since Fred called me. I've actually done a really detailed analysis of this on some, and I'm going to put one of my infographics that I've done. I'm just updating it with today's rate. I'm going to put it on Twitter.
On Twitter and tag me. So your point is that the only way to prevent this continuous slide in the short to immediate term is to cut spending.
Cut spending.
That's what you're saying.
It's not even so much to cut spending as to don't overspend.
Don't overspend. Fair enough.
Stay within the budget.
Fair enough.
Within the budget.
But you do know though that not all the pressure on the CD is government induced. So, for example, we have an election coming. So it's not just government that's going to spend. Political parties will look for money to spend on voters, on T-shirts, on whatever they want to spend on. So I'm coming on. So does that not? Because by the way, the exchange rate is basically the price of the dollar. And basic economics, when more people look for dollars to buy imported things, the price of the dollar goes further up. So you've made a point about the government the deficit and the spending on the government side. But there's also spending by private individuals on foreign things, on imported cars, on imported generators, on imported chocolate. Is that also not going to put more pressure on the currency?
No, coming from which money? You see, in Ghana, all roads lead to the government. That's why the fiscal side is so important. You were just asking, is it a fiscal issue or a monetary issue? The problem in Ghana is that all roads lead to the government. So whatever you do in monetary policy, the government can sabotage it. Look around. Who feeds us all with money? Isn't it the government? The government is the biggest employer, the biggest spender, the biggest subcontractor, the biggest contractor, the biggest everything. What infrastructure project that they are planning and that they want to spend on can wipe out all the T-shirts from China that politicians will bring in.
So in that C plus I plus G equation, the G is the big one for Ghana. The government spending is much bigger than the C plus the I.
Because think about it, cocoa, where does it come through? Isn't it through the government?
Yeah.
We're talking about how bad cocoa board finances are. Isn't that spending? You see, it's easy to look at spending as if it's Ministry of Finance doling out money. But all of it adds up.
So the central bank doesn't really have a hang on the currency, although we believe they should. You're telling me that the way our economy is structured, the monetary side is not as powerful in taming either inflation or exchange rate. It's more the fiscal side.
It's more at this moment. In times past, when we are running well, it's not always so. But at this moment, it is so. Think about it. Look at how much money is being fueled back into the economy because the government is paying an average rate of 28-29% for its T-bills every 30 days. How much money is fueled into the economy?
So the T-bill is contributing because don't forget that because they've been pushed out of the international market, the only avenue to raise money domestically is short-term borrowing through T-bills. So are you telling me that that's then... So you're saying it's inflationary. You're saying the T-bills that they are offering is inflationary. Is that what you're trying to say?
It's inflationary. It's inflationary. And why some of us say you should cut spending is that we're saying that the T-bill itself is contributing to your problems.
But that's funny because the governor, the statistical service, and everybody else have been talking about how inflation has halved from 55% last year to 25% this year. Yet you're telling me that on the one hand, while they are let me make it easy. They are using the rate, the so-called policy rate to try and tame inflation by increasing the rate to ostensibly mop up excess liquidity. So that's what they are doing with their left hand, which is bringing down inflation. And then on the right hand, they are buying T-bills, paying rates above 30%, pushing more money into the system, and then creating inflation in the future. Is that what you are trying to tell me?
I'm telling you that.
But how does that make sense?
It only makes sense to them. It doesn't make sense to any of us left.
But so the T-bill is T-bill the only way they can get money?
At this moment, it's the only way. So that's why you have to cut your coat according to your
price. Let me rephrase the question. Can't they offer a lower T-bill? Okay, so let's put it this way: you are trying to use the monetary policy rate to give a sense of expected inflation. So you raise it ostensibly to mop up excess liquidity. But when it's too high, it also gives the banks an indication that they must also raise their rates. So the average lending rate is high. And then your T-bill rate, which they are offering us, so if I give you money that I have 100,000 cedis, Dalex, take it and lend it to Nathan. Because inflation is 25% and because the average lending rate is 30%, you will tell me that, Aloski, I'll give you 30 plus 3. So, or T-bill plus 3. So it's almost like the economy's rates either are misaligned because the objectives are not clear, or there's a certain understanding of the relationship between the rates that we all don't understand?
Let me give you another perspective. Last year, at one point, the government said, I won't do this anymore. I reject all bids. Come back with lower bids, I won't buy. The rates dropped from 36% to 19%.
Wow. Which means if they did that, they can actually lower the rates.
Thank you. I rest my case.
So is that? So I get your point. So if the government itself is not pushing, hold on. Let's get it. I want people to get it. You're saying that if the government was determined to lower inflation, they could decide to say, look, this 30%, 33% T-bill thing doesn't make sense. Therefore, if the rate doesn't come down, I'm not going to essentially buy anything from you.
Yes.
And the people would respond, and the rate will come to a much more reasonable rate, which will then reduce the inflationary pressure and reduce the pressure on the currency as well. That's the argument you're making.
Yes.
So it's more on the fiscal side than the monetary side. So this is not the governor's responsibility. It's more the doesn't the monetary authority play a role in the trading of these FX of the rates, T-bills?
Let me tell you what the monetary authority has done now. In order to try and fix this T-bill rates, it is now punishing banks, right? By saying that the more you buy T-bills, and stop, the more I'm looking at your lending to deposit ratio. If you don't lend, I'll punish you by the capital reserve ratio. But at the same time, that is a roundabout way of attacking the problem, which the government can do itself.
Wow. Send me your analysis that you've done, and then we'll see. So this is your 16th thing. No matter where I move, it's not going anywhere. All right.
My mouth will be gone.
All right. Thank you for talking to us, Joe. I'll wait for that information. So Joe Jackson, acting CEO of Dalex. So let me just summarize it. Agrees with the Bloomberg prediction that the cedi will end the year at 15.98 to the dollar. The most expensive we found the dollar in the past few years was in November of 2022 when it sold around 14.5-ish. According to Bloomberg, it's going to breach that in the next quarter. Indeed, it's already breached that on the FX market. Now, I need to make a clarification because of a question I asked. So the Bank of Ghana doesn't have its own exchange rate. What it reports is the weighted average of rates various banks trade on the interbank market. All right. These rates are usually lower than the rates at forex bureaus because the forex bureaus trade very small volumes. The banks trade higher volumes. Okay. So that's one dimension of the issue. So that's why Neil Ate will say 13.7 on the interbank market, but 14.9.
Okay, so the banks trade in larger volumes. So their rates are lower than the forex who do... the banks trade in higher volumes. So their rates are lower than the forex bureaus, basically.
Yes. So let me give you an example.
Yeah.
Let's assume a money transfer company has to bring in $100,000 of people's remittances.
Yeah.
And they need to do it through a bank. So the bank then has the need for USD to possibly pay off the people who need to be paid.
Yeah.
So the bank may not have enough USD in stock. So maybe this is Nathan's bank. Nathan will call his guy and say, I need $50,000 to do some payments to Bernard, whose mother sent him money from the US. So that trading, because there's a lot of money they need, the volumes are higher.
Right.
As against Sky needing $5,000 to pay his mortgage, which is a bit smaller.
Right.
So that makes sense. But that's not the only problem. The other issue is reserves. Okay. Because if your currency is to be strong, you must have strong reserve. What's the reserve? The reserve is how much. So there's something called import cover. So because we know we import things, the central bank has reserves of dollars that it keeps, so that if all the businessmen in Ghana wanted to go and buy shoes and cars and things, they will need USD to do that. The central bank's reserves strengthen that because we buy dollars from them. All right. So even those who buy oil, they need reserves. All right. So what you do is that when you trade gold, you trade your cocoa, the central bank must keep those reserves.
Right.
Build your foreign currency reserves so that there will be enough dollars to go around, so the pressure on the dollar reduces.
Right.
So even though Joe is saying that the central bank is not directly responsible for the rate, if they build their reserves, so why do you go for Eurobond loans? You go to the international market to buy dollars. You inject it into the economy. So those who are importing oil, those who are importing shoes, they get enough dollars. Because when there's enough dollars in the system, it's like basic demand. Price goes up when demand outstrips supply.
Yeah.
So if all of us want this iPhone on this table, we will start bidding and the price will go up. If nobody wants the iPhone, Sky will reduce the price just to sell it, not to make a loss. It's the same. So if there are enough dollars in the system, the rate of exchange or the price of the dollar
Will be lower.
That's the point. So the BOG has a role in building our reserves.
Right.
Now, one of the things they tried to do to stabilize the currency was through the gold for oil. What they were saying was that we produce gold, which we sell to get dollars. We don't refine crude. So when we are buying finished products, we need dollars to pay for it. There is a difference within the time and the amount of money we get for gold and the amount we spend on oil. So let's use some of our gold to directly procure oil so we don't have to depend on the dollar. Right. Number two, when you sell your gold, keep a lot of the money in reserves so that you will not need dollars in future at the rate that you needed it in the past. Okay. So you build your gold reserves because gold is a stable metal.
Yeah.
Even though currencies are no longer pegged to gold, having gold reserves, if you look at the behavior of gold's price, it's possibly more stable and more valuable than the dollar. So if you even keep gold in your vault as a Bank of Ghana, you have a buffer against lack of FX.
Yeah.
So the question is, how much did they do that? Which is why I keep going back to them. What did they do on that score?
So they have a responsibility.
In a way, they work with the fiscal authorities. But Joe's right. It's the fiscal authorities who get something Ghana called fiscal dominance, where the need to spend and the need to do roads and all those things affects whatever. Because if the Bank of Ghana even doesn't print money, and by the way, I'm complicating matters. The Bank of Ghana's main job is to control the amount of cedis in the system. But there are many ways cedis can be generated. You can either print it, but you can also sell T-bills to generate money. So there are different types of money. There's M0, M1, M2. So the basic definition of money is not just currency, but also money in current accounts, then money in savings accounts, then monies that are traded within the commercial paper market, and then the the T-bill market. All those things are money. So even if the central bank decides not to print a lot of money, if the government sells T-bills and you go and buy T-bills by essentially lending to the government, they are still creating money. Do you understand my point?
Yeah.
So the point they're making is that the fiscal side, the guys' management of tax and revenues and selling T-bills and all those things has a bigger effect than what the central bank does implicita. Okay, let's move away from all those economics. The main question this morning is, why is the government not able to stabilize the currency? And Mr. Jackson's answer is that the government itself didn't get enough money from cocoa, and they themselves are predicted to spend more than they make. And until they control how much they spend, the expectation of a deficit also affects the way people trade the currency and the price they offer, which is what Bloomberg is talking about. So the government itself has a work to do on this currency management. Okay, let's take some comments on the first question. The first question was, how is it affecting you? The second question was, what can be done, or what was the cause? We don't have full answers for that. Yeah. But how is it affecting you?
A lot of comments are in, Bernard. So many people are sharing their experiences. In 2017, Ghana was still under the IMF program that President Mahama took us to. The NPP could not spend recklessly at the time. From 2020, when we exited that program, they began the reckless expenditure. Let's not blame COVID-19 and the Russia-Ukraine war. Those are lies from the pit of hell.
I see. This one says, let's even forget about the dollar and take a look at the CFA. when I moved to Apalao in 2021, 1,000 CFA was 10.50 cedis. Today, 1,000 CFA is around 23 cedis. And this is the currency of our West African neighbors, Bernard. Traders who usually buy goods from Lome for sale are now out of business. It's so sad. Kwame in Apalao sent that particular one. Nuti Fafa also from Apalao says, please add the CFA rates to the discussion. Traders in and around Apalao are struggling, including traders from Kumasi. The city to CFA rate this morning is 24 cedis. Wow. We are tired and struggling.
Wow.
This one says, in fact, it's a curse to be an entrepreneur in Ghana as we speak. Nuisance taxes, low patronage due to pocket power, city force against the major trading currencies on a daily basis, can't plan ahead of time due to forex and inflation issues, banks and telco charges on same-to-same person account transfers, lack of loans from the bank, and the almighty GRA chasing you, to say the least. Dennis Kale from La. This one says, Aloski, you remember saying every 5 years, 50% of the currency will be lost to inflation. It took us about 2 months for this to happen. There's no politics with management of our currency. It's pathetic that prices of goods and services are through the roof, but incomes have not increased proportionally. I agree with the calls to dollarize the economy until the situation improves so we can stand against the intermittent shocks that we face every now and then. This one says the reason for the stability during 2017-2019 was because of the IMF. That's why we went back to them in the second term. Ni Bano in New Aplaku and Afote. Yarefa says the loans were coming through, and that's the reason for the relative stable exchange rate at the time. We were really doing nothing. Fifi says, guys, and guess what? We are not even financing our loans, which is a major driver of our exchange rate. So imagine if we were. They have no idea of what they are doing, and it's sad. Fifi sent that. Farmer Chooks is asking, what's the meaning of ORR? Bernard, you mentioned ORR.
It's called the optimal reserve ratio, which is essentially the percentage of gold the central bank keeps. The ORR in 2017 was about 7.7%. It's now 38.5% as of at least as of March. I don't know what it is now. The European Central Bank's optimal reserve ratio, even from 2017, was 27%. It's about 33% now. So one argument people like Kofi Akar made was that the optimal reserve ratio should always be above 30%. Okay. Because it's a buffer against the currency slide. That's one of the arguments that I'm making. That's what it is.
Okay, this one says, is it legal for service providers in Ghana to quote in USD and invoice clients in Ghana cedis at the prevailing exchange rate at the time of invoicing? Although their major inputs, which is power, is paid to their ECG, I think the government should step in to regulate. Some entities are taking advantage to exploit clients. This one says, the issue is the garbage we import into this country with hard currency. We import almost everything we use. If we are going to be bold, stop our politics and decide in unison that we are no more going to import anything that can be produced in Ghana. The economy will turn around. Me from Bachona. This one says, these FX losses are a problem for businesses. I'm an accountant, and in 2022, for example, we made a loss and over 17 million cedis was attributable to unrealized FX losses. Now, here's the catch. In 2023, Act 1094 was promulgated, which restricted the deductibility of FX losses. So these current losses, if the cedi continues to fall, cannot be used to reduce profits for tax purposes, nor can the losses incurred in previous years be deducted in subsequent years. Businesses are suffering. Kofi from Lomnava. This one says, we are still paying COVID levy. We are still paying COVID levy. All right. So those are some of the messages that have come in so far.
I'm going to take you around a number of comments on this. Let's start with Importers and Exporters Association. This was as far back as end of April, talking about the USD. Then you would hear from Joseph Obing from Guta. Then you would hear from Pharmaceutical Importers and Wholesalers Association. And then you hear from the Vehicle and Asset Dealers Union. So we're talking about importers and exporters, traders, pharmaceutical people, and other car dealers.
So a matter of concern to business community, especially those who are looking for a hard currency to go and procure goods and bring it to the country. It is a challenge, and all these challenges or hardships that the importer will go through at the port, the importer has no choice than to pass it on to the final consumer. And I think that since the government have lost hope, the government is no more interested in putting that measures in place to curtail the city from further depreciation, and the government is not also ready to give a fixed rate at the port. We call it that the way the city is very volatile with the dollar, there's a need for government to give a fixed rate at the port. So it left the business community into dismay. And
the depreciation of the city is affecting businesses so much. It is very important that we have to stabilize the local currency because it's pushing other factors, especially with regards to inflation and other factors. And then the purchasing power of the consumers keep depleting because of inflation and because of high cost of prices of goods, making them unable to even purchase the goods from us. This affects our turnover to the extent that we are unable even to service our debts at the bank. And that's why we are calling, because this is reminiscent to the last quarter of 2022, where the cedi depreciated against the dollar to about 15.5 to the dollar. And it is getting there. We can only draw the attention of government to our plight, and then we avail ourselves with our other stakeholders to collaborate with government to find solutions. I think this time, this is what we have to do. And all stakeholders have to be on board to help government fund a very sustainable solution to this problem.
Anytime there's a fluctuation in the forex, then because of the exchange that we do, it affects imports. Clearing from the ports, trying to get the forex for the commodity, all affects the final price of the product. And it means that you need more cedis to do your work, which implies you need more money from the banks, higher interest rate. If the exchange rate goes up and the cost of business also goes up, then it gets to a point, when the variation is just a little, then most of the businesses can absorb it. But when it goes beyond a certain limit, then it becomes more difficult to maintain prices. So we'll plead with them to try to arrest the depreciation of the cedi.
So it's like the entire duty at the port is offloaded onto the final consumer. It's adding the depreciation of the cedi and then the USD conversion rate and everything to it. You realize that these vehicles become more expensive than normal. So if government can do something about it, then we have to look at how best the government will fix their policies and their policy interest rate and then the economic factors that can somehow stabilize the city, stabilize our currency, so that by the time I import a vehicle or the vehicle gets to the port and then I import the vehicle at 11 cedis, I will not come and be clearing it at 13 Ghana cedis at the port. Okay? And by the time it moves from Tema to Accra, dollar is not 13.5. And then a government can actually work on it, work on the duty, work on the currency, and then work on the benchmark value so that we can have this issue of the unnecessary increment of vehicles in the system, coming down considerably. I think it's going to help the market.
So those were from the business side, Simon. First was Samson Awingobit of the Import Exporters, Dr. Jeffo Bing of Guta. You also heard from the Dr. William Ado of the Pharmaceutical Importers, and the last audio I heard was from Frank Kofiga, who's the Secretary General of the Vehicle and Asset Dealers Union. Now, the governor of the central bank spoke about this and what they are hoping to do to manage the currency. Here's an excerpt of that voice.
On the balance of payment side, the trade surplus was not as strong in 2023 as the year before. That part of it was because our exports didn't do well as much as it did the year before. So this accounts for the relatively smaller trade surplus compared to a year ago. Now, on the services and income accounts, we also explained that because of the debt servicing issue, we are not seeing a lot of income outflows on the income account. We also explained that we are seeing more remittance inflow. Now, all of that put together has meant that we had an overall balance of payment surplus of about 0.46 billion. A year before that, the deficit was over 3 billion. So we are swinging from a deficit of over 3 billion to a surplus of 0.4. in 2023. This really is the picture, that the major source of vulnerability underlying the currency, right? And that has helped us build reserves better, and therefore one should expect that the currency is better supported.
So the question is, where are the reserves? Because if the 2023, because this is basically what he's saying, 2022, your currency went down to 14, and you brought it down to 10.9 because of the surpluses you are getting and the reserves you're building. Now, are you harvesting your export proceeds into your reserves, or are companies keeping those proceeds abroad? That's a big question that needs to be answered. Because once your currency starts falling, the question of your reserve position is brought in. We are told that Ghana's ORR is now 38.5%. And the gold repurchase program was one of the reasons why this happened. So what went wrong? So the central bank needs to come back and answer this question to us. In the meantime, more comments about the effects of the currency on businesses. Nathan, if you can read some of them for me.
Okay, this one says, yes, as a fresh graduate, the exchange rate is threatening my life in my attempts to apply for scholarship abroad. Payments for IELTS, which hasn't increased, but the exchange rate has taken the cost beyond my reach.
IELTS is in dollars or pounds?
Pounds.
You pay in pounds. Yes.
Pounds is also misbehaving.
Schools that do not require IELTS won't take care of your flight ticket, which is dollar or euro denominated. It says, I want to read MFC Health Economics or Financial Engineering. IELTS used to cost $200. That was about 800 cedis in 2016. Now, the same $200 is 2,800.
Can you imagine?
Kaish!
2,000 cedis more.
Yeah. Joe from Elmina says, if the Ghana cedi has started depreciating against the US dollar, then BNI should conduct serious searches in the various homes of ministers and government appointees. Yeah. They may be hiding dollars in their homes.
We'll bring you more comments. There's an interesting case study that Sky has done that I'll be going to shortly. But you can also send us a voice note on the same WhatsApp number, 054-998-6996. Now, I wanted you to take me through that case study of to make clear the situation for people to understand what we're talking about.
So, Bernard, I'm using figures supplied by one David, who is a manager. So, as of December 2016, his monthly salary was at 10,000 Ghana cedis.
Oh, then it was good.
It was good. That was pegged at 4.1 to the dollar, meaning that his salary in 2016 December should be able to buy him 2,439.02 US dollars. With 10,000 Ghana cedis, he could get 2,439.02 US dollars. Fast forward, present day, January, is it today's date? It was May 2024. His salary over the period has risen to 11,000 Ghana cedis, right? 11,000 Ghana cedis. Now, if you compute using the prevailing rate, which you said is 14.9, what it means is that as of today, 11,000 Ghana cedis could only buy him 738.26 US dollars.
Whereas in 2016, 16, it was 2,000.
2,439.02 US dollars.
So what that means is that the value of his in earnings have been sliced into almost a fourth, because 2004, okay, a third.
A third, yes, a third.
So he's lost about
1,000
66% of the value of his salary.
Yeah.
About 60% of his salary is gone.
Yeah.
Or in a sense, 2/3 of his salary is wiped out.
Completely.
In real terms.
Yeah.
And even though in fact, fast because they had increased his salary by 10%, yet and you haven't even brought in inflation. So if you add inflation to the effect on that his salary, then he's really, really, really impoverished.
Yeah, that's right. So we
need answers from the government.
In practical terms,
we need answers.
Between December 2016 and present day Ghana, Ghanaians have realistically become worse off. If you measure it on the basis of their salary and you factor in inflation.
100%. I think that point is a very important point. Between 2016 to 2024,
yes,
the real value of our salaries have reduced drastically using the dollar.
Yeah.
There's another statistic I'll give you where there's a natural reduction in the value of a currency. So in the US, for example, the value of the currency would take about 100 years to lose its full value. South Africa will take about 93 years. Ghana will take just 23 years to lose the whole value of its currency. So if you had any earnings in the year 2000, by 2023, the money is worthless in real terms.
So if you
based
had
on the current
1,000 Ghana cedis,
I'm telling you,
23 years ago,
yes,
today it's valueless, practically.
Yes, because 1,000 cedis 23 years ago was when I was in the first year of the university. Compare that to today. Let me do an interview and come back to that argument. Who do I have on the line? I have the gentleman from the Second-Hand Car Dealers Association, Eric Boatin. Wonderful. Mr. Boatin, thanks for joining us. Good morning.
Morning, my brother.
How is business?
Oh, my brother. It's very tough. It's very, very tough because, well, once again, let me greet your cherished, listeners. It's very tough, my brother, concerning our business and matter of this dollar issues. It's very serious.
Explain your business to me. You go and buy cars abroad and then you sell it in Ghana. Is that the business?
Yes, we, as the Automobile Dealers Union of Ghana, our main objective is we bought cars from the outside Ghana, Canada, US, and then Dubai and Korea. So usually, the cars we normally buy, most of them are dollars. So if the dollar rate is higher, it means that the car prices too will go up. And for instance, the economy we are now, how many people can afford car by last 2 years, which is on the market between 55,000. Now, because of the dollar rate, it climbed up to 85,000. And now, just about 2 days ago, we heard that the dollar has climbed to almost 15.5. Initially, it was around 13 point something, and those cars are ranging between 85. So it means that currently, as the dollar has climbed to 15.5, that 85,000, that is Kia Morning or Picanto, will go even about 100,000 Ghana cedis. So how many people can buy that car?
Okay, so let's make it easy. I want a Rio to use to do both. If I came to you a year ago, how much would I have paid for it versus today?
It's 65,000 to 70,000 Ghana cedis.
The
that
price?
Picanto.
A Picanto
morning.
For today?
No.
A year ago?
A year ago, just last year.
Last year?
I'm speaking, yes.
Mm-hmm. Last year, so I've been 65 to 70 last year.
70,000, thank you.
But this year, how much will I pay?
Because of the dollar rate, currently, if we are buying morning or Picanto, you have to budget between 90,000 to 95,000.
Irrespective of whether you bought it from Korea or from US or Canada, it's the same.
No, regardless, whether Korea or maybe Dubai. Dubai normally is VAT. Normally we import from there.
VAT. So it will be almost 90,000 from the 60,000.
From 60,000 to 90,000 because of the dollar is 15.5.
Has the cost of the VAT changed in Dubai? Have they increased the price in Dubai or Korea?
That is the main thing we don't understand, because for 4 years, money from Korea to Ghana, the same price. That is $1,200, $1,500.
So the price is not the issue in Korea. It's the exchange rate that is making your business.
Exchange rate, that's right. Because you have to, the moment you clear from the port, you have to sell in cities. So after selling it, you have to convert the money to dollar.
Where do you find dollars to pay the people who sell the car to you? Is it the banks or the Bank of Ghana or the dollars? How do you get dollars to buy the cars?
Okay. If I got the CDs, I have to call my agent, the one normally change my money for me from Accra to do. So I call, and then he will give me the market price. Then I have to, send the money to him in CDs, and then send it back to me in dollars. So that if I will to take the money back to maybe Dubai or Canada or US, then I do that transfer direct to whether bank, because the banks, if you go there, they will tell you there's no dollar. And aside the thing of, they are, business with those street guys. So if you go to the bank, they tell you there's no dollar. And what do? So you have to go to the street.
So that's the challenge. By the way,
that is the challenge.
What about the port charges? So that car you bring in from Dubai, the VITs, do you know the percentage of the cost that you sell to me that is accounted for by port charges and taxes?
My brother, port charges. I forgot. I was in a meeting. Your producer called. Like, I will just give you all the breakdown so that your cherished listeners will bear by it. I think it's a normal thing, because even the COVID, those people who connived and announced that particular COVID, they said there's no more COVID, but we are paying COVID levy, COVID transfer, network charges, a lot of import duties, charges we are paying currently. And because of our currency is cedis, but if you import the cars from maybe Canada or Korea or Dubai, the government of Ghana will convert the duty into dollars so that you pay into dollars. So if it's US, they will charge into dollars. How much did you buy the car? $1,500. Okay, then times 4. So maybe if the car you bought is $1,500, the moment the car will arrive at the port, you have to pay times 5.
You are telling me that the government of Ghana's tariffs are dollar denominated at the port?
Yes, my brother. Yes.
But is that not illegal? I thought the government said we should do business in cities. So why are they charging?
No. They themselves, they know that that is not the way. That is not the way. They are lying. If I may say, so to use that word, if I may say, but that is the truth.
So the port charges and the tariffs are USD. They peg it at the dollar.
Dollar. So if it's US, it's dollar. If it's Europe, it's euro.
So how is that affecting car sales? Are people still buying cars?
My brother, as I'm speaking with you, I'm in a meeting with regional executives. That is automobile regional executives. We are meeting around 12:30. So we are just calculating how we can go about the prices of the vehicles, and then this particular dollar rate has been so that we joy and see the way forward we can move our business. Because brother, it's serious. You wake up with the money. The only thing is that you are waiting for call. Maybe somebody will call you, Charlie, I need some car. But you can't just wake up and go to the garage. What are you going to do there?
Because
So
if you
there's
go
no
there,
any hope.
there's movement. People are not even coming around to even look at the cars. They are just in their house.
My brother, who is coming? You just let your what do you call it? Your colleagues. One of them should go to garages and then took pictures from there. You see nobody, no who is going there. My brother, you just put things aside. How much is your salary? So assuming you want, as a young man, you want to buy a car, and the car prices is around 95,000, and your salary is just about 2,000 cedis. You have 2 kids. You pay your, rent bills and whatever, light bill, water bill, and whatever. How much can you save and buy that car? It's over maybe about 10 years.
Let me ask you a question. Why don't you guys also have payment system where somebody can spread the payment? Most of you want cash down. This 2,000 CD earning guy, if you give him a package where he can be paying 500 CDs every week, maybe he can pay for the car in 10 years. But you won't do that. You want your cash down.
See, let me do the calculation. Now, I'm selling the car. People are not buying it. People are not patronizing it. And maybe you came in that you want to buy the car. Okay, fine. Oh, my brother or senior, my money is around 50,000. So if you can give me the car, spread it maybe 1 year for me, and the car maybe is around 95,000. Okay. When I accept the deal with you, by next month or 2 months later, the dollar rate will go up. So should I call you and tell you that now, because of the dollar rate, the agreement I had with you is 95,000, but because you are giving me 50,000, that 45,000, because of dollar rate again, I'm going to add another 5,000 or 2,000 cedis on it. Will you agree? No. So it means that by the time you pay all the amount for me, to convert the money to dollar again, it means that the car has been, I'm not doing nothing with it because I can't import any car again.
So it's not possible for you to spread the payment for me because of the dollar.
You can't do it because of the dollar. Because of the dollar, it's not stable. So you can predict that, okay, let me give it to the person, maybe 3 months, 4 months, you pay the money back. After the person will pay the money is be useless. You can't do nothing with the money. So it means that your car is gone, the money too is become unvaluable. So what do? Your business is going to collapse with that. So let the car be there. Whether dollar up, it always keep going up. So you keep it there. If the person buys the cash, you just give it out and change the money quickly into dollar.
So if
Then
you okay, I get the point. So another point, if assuming your friend lent you $10,000 to buy maybe 6 cars, and he lent you the $10,000 last year, January, and you bought the 6 cars to sell. Now, if you are paying him back in dollars, it means that you're going to pay him more. You look for more cities to pay him for the money he gave you to buy the car. So your borrowing has also been affected, I guess.
Sure. So what do you do as a businessman? You study the market. Okay, now the dollar rate is this. Okay, the cars arrived. I pick them from the port. I pay the duty, but the still cars are on my bondage. So what can I do? Means that if the dollar is 15.5, last week or last 2 weeks is 13 point something or 14 point something, now it's 15 point something. Okay, then how much can I increase the car price to? Okay, then let me add about 10,000 or 5,000. Then it will match with the amount I spend on the car buying and the shipping and the cleaning at the port. Then it will tally. But the profit margin is unpredictable because you can't predict that, okay, this person, okay, maybe I need one car, maybe 1,000 Ghana cedi profit. You can't predict because if the person needs a car, if you are, something is happening, you are hungry, you need money to cater your family. So what do? If the 500 Ghana cedis or 200 Ghana cedis, you take it like that. And then the money, the main price of the vehicle is most important. You just take the money so that you can change it quickly and then send it to the person so that you can have rest. You see. So in our business now, my brother is serious. We started car business in 1991. From up to 1991 to Kufuor time, car business is good. But as I'm speaking with you, in this current government, my brother is bad, not. Even our former president, compared with former President John Dramani Mahama, the dollar is how much? So you can predict as a businessman that, okay, let me do within 2-3 months' time, I'll get my profit and get my capital. But nowadays, you can't predict.
So your problem is that it's moving too fast too. So the fact that it's changing so quickly makes it worse, right?
That is the issue, my brother.
I wanted to do a car connection with you, but since the way you are talking, I'll talk to you later, right? So thank you.
Okay. You can call me outside of the.
No, until the dollar stabilizes, I can't buy. So you let the dollar stabilize, and I'll call you. Right now,
okay, no problem.
So thank you very much, Eric Boati.
You're welcome, my brother.
I wanted a car connection, but the way the thing has gone, no?
Yeah.
Now, listeners, there are many ways of putting this together, and we are trying to make it easy for you. So Joe has delivered. We're talking to him about this exchange rate. So Sky, similar to what I was doing, January 2022, dollar is 6 cedis, 0.5 pesos. July of that year is 8 cedis, 0.2 pesos. January of 2023, of course, he didn't even add the fact that it went to 13 in November of that year, but we're just looking at the yearly. January of 2023, 9.76. July of 2023, 11.38. January of this year, 11.90. Now, even using the bank rate, 13.95, close to 14. The cedi has suffered 130.58% depreciation between January 2022 and May 2024. So the point you make, 130% depreciation. Unbelievable. I want to read some more reactions. Don't forget there were 2 questions on the table. Question 1 was, how is it affecting? Here are some voice notes telling us how the currency fall is affecting businesses.
Dubai or Canada.
Bernard, good morning to you and your team. A question I want to ask is, how do the black markets get their money? Where do they get their money from? How come they even have more dollars than the bank? How come? It's very important. Let's ask that question.
Hi, my name is Eric. And this thing about our exchange rate is just can't understand it. Last 3 days, I saw Dr. Addison and Akufo-Addo giving a speech at the conference center with regards to the 3i African Summit, and I was just looking at them. Don't they see what is going on in the country? Like, it's purely mismanagement. It's where their priority lies. I mean, $1 to almost 15 cedis, where we are a country where we don't manufacture anything, we virtually import everything, and $1 is to 15 cedis. This is too much. I mean, I don't know what this government is doing, but I don't know. I think I can, me myself, as I'm sitting here, and I can manage this country more than what they are doing. What is this? And we expected more from Dr. Bawumia, and look at where we are heading. I wouldn't be surprised if by the end of this month or by the end of next month, the dollar will be 20 cedis and the pound will be more than 20 cedis. See where the pound is. This is very, very, very bad.
Bernard and Tim, good morning. So my view about the city stability within the first 4 years includes this: that part of that stability was accounted for by the slowdown in imports and transactions as triggered by COVID. During the COVID era, there was a lockdown, so really not much was going on. So you will notice that for the whole of 2020, there wasn't much by way of currency movement. So once we're not importing, there was an artificial show up of the value of the cedi. But once we started importing, and unfortunately we're not also having access to all those funds that we're borrowing as the government was doing then there was no way we having enough dollars in the system. So it was shored up in the first term through borrowing, but then towards the end, COVID further helped to stabilize it. Once the economy opened up and we needed to import more, we were not having a lot of money, a lot of dollars around. Thank you. My name is Joseph from Dublin.
Hello, good morning, Bernard and the team. I'm Johnny from Accra. So this dollar cedi thing, I think, from the top, the politicians, down to us, inclusive of us literates. We are just being hypocrites and we are just playing like the ostrich. Come on, at the end of the day, why are we crying about the dollar? We are crying about the dollar because we want the dollar to be less expensive for us to buy with our cedis, so that we can repatriate the money to foreign countries, in that to buy stuff, to buy goods from them. So at the end of the day, how do you expect our monies, our currency to do well? We are crying because we want the dollar, the city to do well, to be able to still send the money back to the whites. So how is this thing going to work? We need to industrialize the country. We need to make sure that we are buying made in Ghana goods. That is where the whole thing should stem from. That's where the solution to the problem should be targeted. But if we say and sit there and we keep on blaming governments, yes, as for the politicians, they will still try and make news with it and try and make it seem they are the best managers just to win power. But at the end of the day, they can't do it. So please, we the illiterates too, we should try and make it, let people know that this thing is not as simple as that.
Hello, Bernard. Hi, I am a nurse. I am a principal nursing officer. Like, we are almost close to the top of the rank. And when I convert our salary, like $600 in gross, like $600 to $650 in gross, and it's a bitter pill to swallow. It's really, really sad.
Hello, City FM. Good morning. My name is Abla, and I live in Tema. My mother is on 4 different eye medications, and those used to cost us between $300 and $350 about a year ago. But now, those same 4 medications are costing us close to 800 cedis. And anytime the cedi goes down, we have to cough more money to buy the medications because these medications are imported. And paying 800 cedis every month for eye medication alone is so draining. And we are really concerned about the way the cedi is going. Thank you.
Hello, Bernard and the team. My name is Dixon. Good morning to you all. Yes, so with regards to the first question, I am a young entrepreneur. I'm in the concrete industry that I produce concrete products like concrete blocks, curbs, pavement, and stuff. And I import almost all my machinery from China. So last year, for instance, I took an invoice to import a machine. And at the rate that at that time, the rate of the dollar to cedi was moving around 8 to 9 cedis before you can get $1. Then I needed to take a loan to support the importation of the machinery. So at that time too, I think the interest rate was around 28 to 30%. So I applied for a loan. Monday, just last Monday, that's when I got the disbursement of the loan. And then with regards to the disbursement of the loan, now the interest rate on the loan is around 40%. I think it's 38.9% or so. And now that I've received the money on a higher interest rate, it's almost 40%. The machine cost is the same, but now I am supposed to change more cedis to get the same dollar, because at that time the rate was 8.5 to 9. Now it's around 15 cedis. So the gap from 9 to 15 cedis, that means 6 cedis, has also become an additional cost for us to bear. So Bernard, it is very, very crazy. And even my importer just sent me a message that even the freight cost for 40 feet container is now hovering around, I think it's at $4,000 to $5,000. Meanwhile, when I took the quotation, it was around $2,300. So Bernard, in fact, As a young guy, I am totally disturbed. The way and manner things are going on in this country, every day things are going on. If you go and ask even the price of a query dust in our area, before February, we used to buy query dust around 2,500 per 20 cubic. Now it's around 4,500 to 5,000 cedis. So things are increasing every day. And with regards to the second question, though I am not an expert in that field, but then my little knowledge is that, you see, we are giving all the big contracts, juicy contracts to foreigners. So when they do the business and then they get the money, they pay them in dollars, and they take them, or they pay them in cedis, they change the money and send it back to their country. So, Bernard, the system that we are in, we want government to set up, instead of him to manage the cedi and make sure that the economic has a stability. They have really forgotten about it, and then now they are going about doing their politics, which is very bad. If you spoil the country and you come and take the power, how will you come and then reverse the things back for us to have a normal life? In fact, we are very depressed. Thank you.
Hello, good morning, Bernard. This exchange rate issue, we don't have to stretch ourselves to find out what the issue is. The government's economic fundamentals are terribly weak. So the exchange rate is exposing them. Find out who can prove me wrong by this statement. Thank you.
Bernard, good morning. Good morning to you and your team and everyone at City FM. I think the analysis in Bono, it's been done some way. I think the dollar will even go much higher. Do you know what? For the past almost close to 2 years now, the government has not been paying its external debt. That DDEP thing, they've not been paying. So like, whatever money, so far we've received 1.2 billion from the IMF. All that money is still here. It's local, like we are using it for budget support and all that. No money has been paid for debt, except I think the local one that they owe them. So in the nutshell, if we start paying for our external debts and all that, the dollar will suffer. So I think we should brace ourselves for more. This is Mashki. Bye.
Hello, good morning, Bernard. This is Kweku from Amra here. The issue that you're discussing currently concerning the cedi to dollar exchange rate, the banks are even killing us the more. I just did a transfer for a service payment outside, and if you check the conversion rate, they actually were charging $1 to $15.1129. This is less charges, because after this goes through, the bank also sends you an alert to say that these are the charges of the transfer you've done. So it isn't just the Guru guys outside making profit or ripping us off. The banks themselves are ripping us off. Meanwhile, if your dollar account you are trying to withdraw from your own dollar account, you pay between 3 to 6% of the amount you are withdrawing. How do we work with this? So constantly, if you want to do payments, you are losing. But when you get paid in dollars and you do not have a dollar account, they will tell you they are using their board rates, which is far less what even they state on whatever their forex.
So those were some voice notes coming in. It's 9:26. Dr. John Kwachi is with the IEA. I have a few questions for him. Doc, thank you so much for joining the program. Good morning.
Good morning.
So in 2022, the currency fell all the way to around 14 in November and then came back to around 11 by December that year. So it stabilized. Indeed, the governor said they had built their reserves, and then we had a surplus in our trade accounts, and therefore things had come to some stability by middle of 2023. In the past few months, the thing is going back, is now almost 15. Do you know why the currency started losing its value again?
Well, Ben, the fact is that the CD, the underlying fundamentals of the economy haven't changed that much. So even though we are able to stabilize the CD, I always see that as a temporary, kind of achievement. When they come out to say, oh, we have stabilized the CD, I always come out to challenge them and say that this is only temporary, because the underlying fundamental structure of the economy, has not changed. Okay, so it looks like we rely on almost entirely on inflows that come from outside, from loans. When we had access to the Eurobond market, we could flood the market, Ghana market with dollar, and then we started to rely on cocoa syndicated loan. These days, we rely on IMF disbursement. I have always said that, relying on external, especially loans, whether from the IMF syndicated loan or cocoa loan or Eurobond, to support your currency is not sustainable. Because the fact is that when you begin to pay back those loans, the IMF funds are not for free. You will certainly pay back one day. Eurobonds, you pay back. Cocoa syndicated loan, you will pay back. When you begin to pay back those loans, there will be an outflow, of the funds that you got in the first place. So it looks like we are now waiting for the next IMF disbursement, which is just about $360 million, dollars. Why should we do that? And if it comes in, how long is it going to be able to support the CD for? So, Ben, I keep coming back. The underlying structure of the economy hasn't changed, and therefore the CD is vulnerable. It is susceptible to instability, to depreciate. We can only stop it temporarily for a short period of time, and then the depreciation will resume.
Well, we were told that the central bank had increased what is called this ORR, optimal reserve ratio, the gold reserves, from around 7% to 30-something% in the previous year. And we were told that was one of the reasons why the currency stabilized around 11. So I'm not sure if that information is available to you, and whether building gold reserves from the central bank could be a longer-term solution to this problem.
Well, of course, your reserves support your currency. It could be gold. It could be in the form of convertible currency. So your total reserves, international reserves, certainly support your currency. Because when people come with CDs to demand foreign exchange, you will have enough foreign exchange to support it. So wherever your reserves are coming from, whether it's gold or foreign exchange. But in terms of gold, what we need to understand is that, it is important that we increase our own ownership or reserves of gold. Going to buy somebody's gold and giving CDs back to them, I don't think, it's even the right thing. We need to take ownership. We need to, increase our own gold ownership. And we have gold in this country. Recently, the vice president went out there to say that he is aware that our gold reserves amount to over $10 trillion. Okay? So if we have that much gold, why don't we take ownership of it? And we rather, contract foreign companies, and then they come and mine the gold. They take out 85% and we get 15% in royalties and taxes. That is I don't get it. Why should we do that? We should take ownership of our gold and use it to back our currency. Okay? Now, if we are not prepared to do that, I went out recently to say that the way that this currency, the CD, is being mismanaged, we better, maybe I will say that we should adopt the dollar on a temporary basis. Official dollarization, or we should have a currency board which will never lend to government and which will back the currency issue 100% with foreign exchange. You see, currently, the Bank of Ghana Act enjoins the bank to back the currency issue, the CD issue, with at least 40% foreign exchange. And the rest 60% is usually in government treasury bills and so on. I have consistently argued that we need to increase the forex cover, consistently from 40%, 50%, 60%, 70%. I'm not even calling for 100%, cover, foreign exchange cover, And if we get there, as we increase the foreign exchange cover, you will see that the CD will be strengthening. So,
but this your first proposal on the official dollarization temporarily. How would that work in practice? To say that we will only use dollars for a period of time? Who will issue the dollars, and will we have to get the U.S. government to print it for us? How is that going to work?
Yes, that's how it works. Zimbabwe has recently adopted the dollar as their currency. Now, practically, what that means is that, of course, the dollar is not your currency. You cannot issue it. So you have to come into agreement with the Federal Reserve Bank. And what they do is that they will look at your foreign exchange reserve and issue you the equivalent in dollars. You cannot issue it. So it will take us back to the same issue of backing your currency with enough foreign exchange. It will take you back there. The disadvantages of adopting somebody's currency is that you lose control over your monetary policy. You lose independent monetary policy. So you will have to actually tag your monetary policy to that of the U.S. But I'm saying that these are some of the things that you may have to sacrifice, because the way that this currency is going, in fact, is it Bloomberg or somebody, Fitch or Bloomberg, they are predicting that, the currency by the close of the year will get to over 16, dollars CDs to the dollar. Do you know that we met, the civil society organization met the IMF recently, a staff came from Washington to come and launch the Regional Economic Outlook for Sub-Saharan Africa. And we met with them, and this issue came up of the currency depreciating. And could you imagine that they said in the meeting that even the CD has not depreciated enough, so we should allow it to depreciate more.
Hey.
Yes, that's what they said. And I challenged them. Hey. And I said, what are you talking about? So, for all you know, the IMF, in their own mind, they don't even see the currency as having depreciated enough.
Wow.
Yes, that is a fact. And they put back the question to me, how can you stabilize your currency? And I said, look, we need to take ownership of our mineral resources, natural resources. Ben, does it make sense? I mean, sometimes is it because if you are not an economist, does it make sense to you that if we take ownership of our foreign exchange, our natural resources, we can use it to back the CD and it will become a strong currency? Do you I mean, do you understand that?
I do. It's a simple thing. We understand it.
It's a simple thing, but it's just because our people are not prepared to do it. I hear Bawumia speaking out there that we are going to take 100% ownership, local ownership of our resources, and also add value to it locally. And I have welcomed it, because to me, this is what we all know as economists. We know that this is the way to go. Now, while he has not been able to do it in the past 7 years, that is another question for him. But going forward, if he's saying the right things, I will support him. That is what we need to do. It's as simple as that.
We'll end it here. Thank you for your insights, as always.
Okay,
Thank you. That was Dr. John Kwachi talking to us, economist, IEA.